It's happened again. It's happened again. It's almost showtime, right? Welcome to the Boss Forex channel. Good evening, good morning, good day, whichever time you're joining us from. And yeah, welcome to it, man. I'm just gonna literally tell you about how I made like close to 30k 30k in BWP, right? Like this is like 2000 something dollars in pullers, right? So this happened on the day the Fed rate was released, which is also known as the FOMC, right? I guess we all know the vibes. We all know the vibes. If you know about the FOMC, what really transpires there is the fact that around first of all, it's NFP, right? NFP, which is your non-farm payrolls, which is released on the first Friday of every month. The first Friday of each month, which basically measures the employment change in the previous month, right? Because this is released the first week of the following month, it basically covers the previous month, the data for the previous month, how many jobs have been added into the market, how many, and also how much is the unemployment rate, right? So with that said, you should be able to know that this is how the sequence of events pans out. First of all, it's NFP, which is like the first week of the month, that first Friday. After that, it will be followed by CPI, right? CPI is basically your consumer price index, and this usually happens around mid-month, around the 12th, just mid-month, 12th of the month, maybe sometimes the 13th, sometimes the 14th, but it's usually around the 12th of every month after your inflation. I mean, after your NFP. So why that happens is because you have data, because you have NFP data, you are able to, with the NFP data and with the CPI data, then comes what? Then comes the FOMC, or which is also known as the Fed rate, right? This is when Mr. Jerome Powell releases what the interest rate is, like the interest rate. He releases the interest rate, and this happens 8 times in a year. So, like the last one was on the 19th of March. This is like basically 7 days after your CPI. So the chain of events is you have your NFP, you have your CPI, which measures your inflation, right? And then with these two, you are able to tell, Hori, do we increase the Fed rate? Do we increase the interest rate, or do we decrease it, right? Because for you to 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 reduce, or there's what we call a hawkish increase and a dovish increase. A hawkish will be an abrupt one where they either increase it sharply or drop it sharply, and then the dovish one will be where they do it steadily, right? So when you have the CPI information, which is your CPI and your inflation, or your inflation consumer price index, and your labor data or your jobs data, you are able to tell, do we increase the Fed rate, or do we reduce it, or do we leave it the same, right? Now, how did I trade the FOMC on the 19th? Because I knew that before they release it, they give you the actual and the previous. Actually, not the actual. They give you the forecast Sorry about that. They give you the forecast. They give you the forecast and the previous. They give you the let me just do this. They give you the previous, the forecast, and then they wait for the actual. And then usually they'll tell you that they are going to reduce it, or they are going to, I think the last one was at 4.75 or 4.25 if I'm not mistaken. And if they reduce the interest rate, it weakens the dollar. That's how I caught the move. So the interest rate is going to be reduced, but sometimes it's not so obvious. So you need to do what? You need to wait for the market to react and see what really transpires. So on the 19th on the 19th of March, that's around the same date gold hit an all-time high, because after the data was released, the dollar was weak. The dollar and gold have a positive, have an inverse relationship, or a correlation, an inverse correlation. They are negatively correlated. When the dollar is weak, gold is going to shoot up, and when the dollar is strong, gold is going to sell, right? So after the data was released, I jumped in on my buys, and this is where it all started, right? As you can see, you see this sharp, this spike here, this spike here, this is where it all happened. So I jumped in on my buys, and obviously after the data was released, and then sorry about that, this one here, this bullish candlestick here. So price shot all the way up, and then it went all to that all-time high. I think that's the all-time high we've ever had for gold. So after this, the news came out, and then I was in buys, and I made like close to 35k, which is in BWP or Pula, Botswana Pula. So yeah, that's just about it. This huge spike, and then there was another huge spike. After that, there was a bit of a pullback, as you can see, that inverted whatever, and then price continued shooting all the way up. I caught my buys here after the news was released. The dollar was weak, and then we went all the way up, milked the market, and as they say, the rest is history. Simple as ABC. So you just have to follow the market, know your fundamentals, and make money from the market. Simple as ABC. After that, once you make your money, you always have to know the vibes. You have to withdraw. It's part of risk management. So this was the buy. Ever since then, we've seen that after that, the market, you can see it formed more like a head and a shoulder. That head, left shoulder, right shoulder, and it's been on the back foot ever since. You see, after that, what did price do? Came back to where it was before the market, more like a price correction, then pushed up to form that right shoulder. Then there was a pullback, like your lower low, lower high, lower low, lower high, lower low, and this is where we find ourselves in. Sometimes people always say, how do you guys master gold like this? It's as simple as that. You just have to master price action and know the relationship between gold and the US dollar, right? So once you know that, you are good to go. You are so good to go, and you literally make money like it's going out of fashion. You know what I mean? So keep it logged, keep on watching and subscribing to our channel. You will learn so many things. We'll be sharing our nuggets, our Forex nuggets. We'll be sharing a lot of insightful information that you'll never find anyway, And it's very important to always keep on learning, always keep on watching the market, following what's happening on the market, instead of just wasting time and scrolling aimlessly without really anything behind your scrolling. We all know that these machines, these gadgets, these phones, they are money making machines, if you if you use them properly. You just have to know what to do and keep going every day. That's just about it. There isn't much to talk about. As you can see, the time in my zone right now is like 20 minutes before 1 in the morning. This is like morning time, and I'm actually waiting for let me just show you quickly. I'm waiting for CPI, the Australian CPI, year on year. And the next, by the way, the next FOMC is going to be on the 7th of May. We are going to make money again. You see, this is the news that I'm waiting for. 2:30 Australian time, 2:30 my time. This was in CPI for the Aussie dollar, right? So yeah, this is like year on year, not month on month, because there's different CPIs. There's month on month, there's core CPI, there's year on year, and there's quarter on quarter. You know what I mean? So yeah, man, let's keep it locked and keep on making money. Simple as ABC, man. You know the vibes, bro. You know the vibes. Adios, amigos. Till we meet next time. Bye.